Hi, this is Zach here with the weekend edition of the Bulletin Board Heroes here at Zach's Traders Cafe for Sunday, the 12th of October. And obviously, we're in crash season now in mid October, but so far, FTSE responding as you might expect it to do with Wall Street's tumble after the China tariffs debacle instigated by President Trump. But what you can see here is we were already looking at the top of that rising trend channel there from June, the black channel, 95.77, the record high. We came back from that. In terms of support, we were expecting initially 94.20 as a best case scenario support zone, but actually probably realistically looking for 93.50. So maybe for Monday, Tuesday, that would be the zone. Worst case would be the floor of the channel 92.50, but I'm expecting worse than that at this stage, especially given the previous reaction to the tariffs rug pull that we had back in April. But obviously, it is October and it is crash season. Moving on to the DAX, and here you can see that we backed off from record highs. We were looking rather sheepish at those levels anyway. We already had the 50-day line there rising at 23,000, or just under 24,000 as potential support for this market. Worst case, down to 23,500 on the floor of that April channel. But at this stage, again, not expecting anything worse than that. Moving on to the Dow, which obviously took the full brunt of the horrors on Friday. And here, obviously, as we had the news during the session, we had a full-blooded retreat down to the 50-day line, which is actually where we were expecting, or we already factored in a fall to that level. In fact, that was suggested as a potential buying zone for this market, so 45,400, 45,500. The ominous sign here is that the RSI has fallen like a stone, so that does suggest we could actually have rather more on the downside. The old resistance there, 45,000 from July. Hopefully that will be the limit of the current pullback, but obviously this rug pull from Friday rather painful and may lead to further losses. But 45,000 in the first instance is what we're looking at. Need to get back above 46 to undo the damage done by Friday's fall. Moving on to the cryptos, and Bitcoin is next, where we've heard about sort of death and bankruptcy and all other stuff from the fall from 125 down to around 110, which seems a bit strange given that we've had falls like this previously. The January to March decline pretty painful, and even August decline from 124 was quite a painful event. So interesting that since Friday we've actually held the floor of that channel around 110. And the view here is that while we're above 110,000 on an end of day close basis, we're actually looking for a potential support point here rather than a decline. If we do get a decline, the worst at the moment is seen as being the 200-day moving average at 106,000, not looking at anything worse than that, despite the press willing people to lose money and obviously hating Bitcoin. More of a casualty on Friday was actually Ethereum, and here has been disappointing. I've said it was disappointing, and the issue was that we weren't able to make much progress through the 4,700 zone, and also we were looking rather sheepish near the 50-day line, now falling at 43.59. Current situation is that we've fallen below the floor of that rising trend channel. The next support level down is 33.50, the August support, and while we're below the 4,000 zone and the broken floor of the channel, we still have the risk of 33.50 before this market can get a move on. But the hype that we had in August looking rather misplaced at the moment. With the cryptos down and the indices down, the winner is gold, although perhaps not as big a winner as it could have been. Here you can see that we're finding support at the top of the old rising trend channel. That's now around 3,900, above 3,900, we were looking for 4,160 by the end of the next month. We could actually get that by the end of this month if we are lucky. So that's an interesting situation. Moving on to the stocks and starting off with Audioboom, where the company being up for sale and imminent results this week, apparently on the 15th, etc. Midweek leaves the shares near recent highs. What's good about the price action at the moment is that we're holding above the old February resistance around 660. Above that, we had our target of, well, basically the line there around 765. And as a best case scenario target, maybe by the end of next month, if everything goes well on fundamental news, up towards £12. But the key here is staying above that 660 zone. So while we're above that, feeling relatively comfortable, stock market crashes permitting. Moving on to Amigo, which I hate looking at because obviously there's always a chance that it will be no more. But it is interesting at the moment. We've had a rebound above a rising 50-day line, and also we've had support coming in above that 50-day moving average and the RSI 50 level, or at the RSI 50 level, which actually, if this was not Amigo, you'd be looking for an instant move up towards 0.75 and the top of that broadening triangle, as well as that being 1 year resistance. So let's see what Amigo can do, especially while it remains on the right side of the 200-day moving average of 0.33. On to Ascent Resources, and here the stock remaining pretty bouncy after last month's push through into the 0.6s. Here you can see that we're still finding support above a rising 50-day line. We're also finding support above the RSI 50 level, which is good. And Friday ended with a gap closed by signal above the top of the gap there at 0.47. Above that, we're looking for not only a retest of 0.62, but also the old support there as high as 0.8 by the end of next month. Punchy call, but it's actually quite a punchy chart. On to African Pioneer, which is feeling the benefits of mini resources stocks going through the roof. In this case, we've had an RSI rebound above neutral 50, but rising 50-day line there and little bull flag. Looking for 1.8 pence as soon as the end of this month, while we're above the recent resistance around 1.1 pence. Onto a stock which could be a decent fundamental situation, CML Microsystems, a nice end to the week there. Rising trend channel there from back in the summer of last year. Top of the channel heading for £4.40, which we're looking for as soon as the end of next month. Not quite sure why we're so optimistic, but nice price action there with the 50 and 200-day lines now both rising, and support on Thursday and Friday above the rising 50-day moving average. So let's see if we can stay above or stay on the right side of £2.80 and head towards £4.40 over coming weeks. I said that Ferro-Alloy looked pretty decent, and it was surprising that the shares didn't move up enough after its big news that I think was a week or so ago. The interim results and the feasibility study update. Not sure where that company is on the Ascent curve, but we are heading towards the top of the rising trend channel there. 16.5 pence, and above that looking for 24 pence as soon as the end of next month, while we remain above the old December resistance there at around 12 pence. Just want to mention Guardian Metal, which continues to be like a machine in terms of the rise that we've had. Obviously, Druckenmiller got into the stock around the 60 pence level from memory, and he's already doubled his money, which is obviously very nice. We are we found support at the top of the old channel there, which was a previous target there, around 106, and looking for £1.40 as soon as the end of this month, which is a February resistance line projection. Probably looking for rather more than that, given the way that the shares are gapping up and finding support above old resistance. So it actually looks as though this situation is actually not say getting started, but it's actually revving up rather than actually slowing down in any way. Onto a stock which is maybe still revving up, is starting to rev up now, which is Gelion. Here we've got a rising trend channel, top of the channel there, a bit higher than I've drawn, so up to 34 pence, looking for that by, well, as soon as the end of this month, while we're above the 50-day line there at 21 pence. So double RSI rebound above neutral 50, giving us the encouragement that we are on our way to 34 pence by the end of this month. I noticed another chartist, obviously a very esteemed one, was been suggesting that Great Southern is a potential buy situation. Here we've had a rebound above a rising 50-day line, which tends to be my leading indicator on the upside, as well as an RSI rebound near neutral 50. We've also had a decent end of week close above a rising 200-day line, so it's a triple signals there. So looking for the shares to hit the top of the range as soon as the end of next month, which is around the 4 3/4, 5 pence level. especially while we're above the 200-day moving average, 2.8 pence. A stock which has been in focus of late is Imaging Biometrics, one that I think it changed its name, which is probably why I haven't heard of it. But here we've got a V-shaped bull flag. We've retested our first target there around 1.25 pence above that, looking for 1.8 pence as soon as the end of this month, especially while we remain above the 200-day line there, 0.98 pence. On to Mkango, which is in the Guardian Metal stable, i.e. lap of honour, and heading for higher levels still, looking for 70 pence by the end of this month, while we remain above initial October resistance at 53 pence. You can see unfilled gaps to the upside and new support coming in at old resistance. Very pleasing to see the positive call on Pulsar Helium coming into fruition. Did suggest that the shares didn't go up enough when they had their big news at the turn of the month, and that proved to be the case. They stayed above 28 pence, which is a rather tight stop loss, and we've had a V-shaped bull flag breakout and also broken our previous target there at 36 pence. Above that, we're looking for the resistance line projection from this time last year, heading for 50 pence, and looking for that by the end of this month or even sooner. 50 and 200-day lines in heading for a golden cross, and that tends to be the strongest part of the cycle. The other point to note is that we've had a bear trap out in reversal, so gapping down in August and gapping up in September. So everything going on there in a positive way. On to the last two. The first one I've never heard of before, which is Sorted, and although it gives one PTSD from being on a train. You can see here that we've broken through the 200-day line there at 28 pence. Best case scenario target, even though obviously this may not be a liquid situation, is up to 70 pence, which we're looking for while we're above the 200-day line at 28.5 pence on an end-of-day close basis. Finishing off with Tertiary Minerals, and what you can say here is that if this stock is going up, we really must be in a bull market for resources stocks. We've had the shares hit the previous target there at 0.06 and looking for up to 0.09 by the end of this month or even sooner. In fact, you could argue that that target there is actually at 0.10, and let's go for that 0.1 as an end-of-month target while we're on the right side of 0.06. That's it for me today. More updates tomorrow.